Good evening. This is the Post-Market Recap by AGI Era. Today is Monday, January 26, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a nuanced battle between bulls and bears, with a slight but discernible edge to the optimists by the close. The S&P 500 finished the day up 0.5%, settling at 6950.23. Technically, the index is now trading comfortably above the psychological 6,900 level, demonstrating resilience in the face of underlying crosscurrents. The Nasdaq 100 also pushed higher, closing 0.42% higher at 5713.21. The Dow Jones Industrial Average finished up by 0.64%, adding over 300 points to close at 49412.4. Crucially, trading volume today was elevated across all major indices, which implies that these moves carry institutional conviction rather than being merely speculative noise. Heavy volume on an up day typically signals strong buying interest. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, data was not immediately available from our Stook feed. However, given the overall positive close, it's reasonable to infer that market participants are not exhibiting widespread panic. We are seeing a subtle divergence in sector performance. Money flowed noticeably into utilities XLU, which gained 0.73%, slightly outperforming the technology select sector SPDR fund XLK, which rose 0.68%. This narrow spread between a traditionally defensive sector and a growth-oriented one tells us that investors are favoring a balanced approach, perhaps seeking some defensive exposure even as the broader market shows signs of strength. This isn't a strong rotation into safety, but rather a cautious allocation within a generally positive environment. The primary driver of today's moves can be traced back to a combination of economic data and currency dynamics. Unfortunately, the 10-year Treasury yield data was not available from our Stook feed today. However, we can infer some bond market sentiment from the currency markets. The U.S. dollar index settled at 96.88, down 0.54% on the day. This move is significant because a weakening dollar can provide a tailwind for multinational corporations, making their exports more competitive and boosting the repatriated value of overseas earnings. Our market narrative news indicates USD selling as geopolitical tensions drive currency shifts, and reports of the dollar slumping, with the yen surging on suspected intervention. This suggests a broader shift in currency flows, potentially driven by global risk perceptions and central bank actions abroad. Meanwhile, crude oil is trading around $60.71, down 0.59%, responding to a lack of specific catalysts today, but generally influenced by global demand outlooks and geopolitical stability. On the economic front, we received some encouraging news. U.S. core capital goods orders rose for the fifth straight month, and durable goods orders surged, exceeding economic forecasts. This robust data points to continued strength in business investment and manufacturing, providing a solid fundamental underpinning for the equity market's performance. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. The Magnificent Seven saw a mixed but generally positive performance today. Apple finished the day up 2.97% at $255. Meta closed up 2.6% at $672.36. Alphabet Google finished up 1.62% at $333.20. Microsoft closed up 0.93% at $470.28. However, not all tech giants participated in the rally. Nvidia finished the day down 0.64% at $186.47, and Tesla experienced a more significant decline, closing down 3.08% at $435.20. The mixed performance in this group is notable because it suggests a more discerning approach by investors within the tech sector. While Apple, Meta, and Alphabet saw strong gains, likely reflecting continued investor confidence in their growth trajectories and upcoming product cycles, Nvidia's slight dip and Tesla's more pronounced decline could be attributed to company-specific news, profit-taking, or broader concerns about valuation and demand in certain segments like electric vehicles. This indicates that even within the high-growth tech space, investors are becoming more selective. After hours and look ahead. Looking at the after-hours tape right now, we're seeing some interesting movements outside of the typical tech leaders. Shares of Xylem Inc. are moving significantly, up 3.33%, while Baker Hughes Co. is up 2.37%, and Biogen Inc. BIIB is also showing strength, up 2.37%. These are industrial and healthcare names, suggesting that market interest extends beyond just the technology sector, potentially indicating a broader appetite for value or specific industry catalysts. As we pivot to tomorrow, the economic calendar does not present any major, market-moving catalysts. Investors should specifically watch for any emerging geopolitical headlines, particularly concerning the ongoing currency shifts and potential central bank commentary that could impact the dollar or global bond markets. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.